A very good morning to you. Let's just catch up with some of the things that have happened in the news both late yesterday, overnight. Starting off really with what was a phenomenal day yesterday for the equity market. Obviously record highs again and breaking 21,000 in the Dow for the first time ever. Quite an interesting thing here that someone asked me yesterday. So the new group that's starting was about asking me whether or not I paid much attention to the VIX index, which is obviously that kind of volatility gauge, and trying to explain the reason why. You've got what you could argue is a lot of political uncertainty, whether it's Trump on the fiscal side and whether there's an implementation risk, whether it's European political risk in France and the Netherlands, whether you've got Brexit the same. There's so much stuff out there. You could kind of would wonder why people are, why that measurement, if you like, would be so low, especially in the context of those guys who were around through the financial crisis. Obviously, it was the opposite effect. It was way up there comparative to, it was at least double of what it is at the moment. But one of the things here to look at is just how almost one-dimensional the rally has been in terms of the equity market. Might well explain the reason why that measurement is so low, because ultimately it's a measurement of volatility. So not just fear, but of market movement. And what I've got measured up here is the Dow Jones. And I'm looking at the Dow when we broke 19,000 to 20,000, and then ultimately 20,000 to 21,000. Now, let me give you the stats first, and kind of making more sense of the lack of volatility is because yesterday, in terms of the S&P, it was the first 1% move up or down since December 7th, or a run of 57 consecutive days, which was the longest run in nearly 3 years. So when you're kind of thinking about options in the market and the S&P and the measurement of volatility, there has not been any volatility. It's almost been narrow ranges where we've just every day managed to close higher and higher by fairly incremental amounts of less than 1%. Now, from a Dow point of view, the stats here that Deutsche are looking at is that the Dow across the 20,000 level, and it took 64 days, i.e. from 19,000 to 20,000. That was the second quickest rise that we've seen from a 1,000-point move in the Dow ever. The only thing is that took 64 days. The move from 20,000 to 21,000 took 35 days. We pretty much halved it in terms of its time frame. You can see here, quite roughly, I've just drawn these rectangles on my Dow chart on a daily continuation here to see how quickly the market got from 20 to 21,000, and here we are, we're 100 points above that in the futures already this morning. Are we going to knock it out the park in 15 days and Trump will have that look on his face that is pretty much always on his face of what a great job he's doing in terms of when he looks at the equity market, which I'm sure he does on a daily basis. You've got to feel that he's pretty happy with that situation. But you could argue, though, the longer term play here is that the quicker this moves higher, the more the market buys into the fact that ultimately he's going to deliver on his promises with his more presidential delivery that he gave the other evening, then all the more he has to live up to. And so that risk or implementation risk at some point is going to be questioned, and people's patience inevitably will run short at some point. Can he keep this kind of positive sentiment running for the time being? At the moment, it appears that he can. And one of the other things we were looking at yesterday was almost as well, when you're looking at these big kind of handles, these big figures, 19, 20,000, you can see here, even at 19,000, we have a push up to the level. These are daily candles. You're going to have a bit of a hesitation before the big figure, then we break it. There's almost like a degree of mild euphoria when you break it. It has quite a decent push up. Then when we got to 20,000, that was kind of through the Christmas period, so volumes dissipated. It was fairly quiet there. but then we eventually broke that and pushed higher again very quickly. On these days, especially when we're approaching 20,000 and 21,000, it's almost like the fundamentals go out the window for a short period when we get within striking distance of that level, and the market just psychologically wants to have a test on it. And certainly you've seen that happen through European morning sessions, grinding up on very real little new catalysts. Just this whole, we want to push it to that level to have at least a test of yesterday, which we broke immediately pretty much, which is very different from the case in mid-December, all the way it took really till the January or the end of January before we eventually broke that marker. So equities very buoyant, and then little surprised to see this morning the S&P in the futures has backed off a little bit from that most elevated level. DAX likewise, but still sitting above that 12,000 level, where you've got pivot, which will probably be an interesting area to look at on the downside support at that 12,011 mark. A quick look elsewhere in the other assets then. Fixed income futures seen marginally lower. The T-note pretty quiet in overnight session, as is typically the case. It comes after a move lower through the really European morning and early US session. There's still a lot of focus on rising US yields, on the probability of a March rate hike from the Fed, elevated at that 80% level. So if stocks start to push up again, you've got that inverse relationship in play at the moment from a correlation basis. So down 2 ticks. Likewise, gold, the more that people will be talking about the Fed hike probability, the more pressure inherently that will probably push onto gold prices, as the dollar will continue to firm. This morning the dollar is up around 0.1%, so the major pairs overall pretty flat at the moment. Okay, let's get into the crux of the news flow then. First of all, starting with cable. As you can see, cable is pretty flat overall, sitting just up the 123 handle, so not too much movement as yet. Pretty quiet overnight in Asian trade. The one headline that you've probably read already this morning was that UK Prime Minister Theresa May has lost the Brexit vote on the law to protect EU nationals. So if you remember rightly, this was all about the formality of going through the House of Lords, and what's happened is the protection, or what they see, for having some clarity about EU citizens who are already in the UK. What the situation will be with them is the amendment that they want to basically change the government's Brexit bill. Now, this was very much expected. If you remember, yesterday morning we were already talking about this, and hence the reason why the reaction in the market has been close to nothing in terms of this morning. If you remember yesterday, cable was underperforming a little bit that of the euro-dollar pair. That was because that was when the people were reacting to the fact that this was going to happen. So it was kind of a buy the rumour, sell the fact type situation. It occurring was in line. We'd already repriced a little bit weaker sterling yesterday for this event. What does that mean then? And there was a chart that I shared with you in the chat yesterday, but quickly just to have a look. This was the procedure in which how the Brexit bill has moved through Parliament. And we've done the House of Commons and we've done the House of Lords. The situation that we got to we are at this morning is that essentially going through the first, second readings in the committee stage and the reporting stage, the House of Lords deemed then that there's an amendment, particularly on that EU citizenship part, that needs to be discussed and re-voted by. And so, given that there's a change, it then goes back to the House of Commons. The House of Commons is where the government under Theresa May has a majority, so the likelihood is then they can kind of vote that down, push it back to the House of Lords, where even if they were to accept it, it then goes back, if you like, to then get ratified by the House of Lords before becoming a royal assent and becoming law. What's happened does not change the timeline in regards to Brexit, not at least at this point. All that this is, in my mind, is really a political kind of move just to kind of say to the government that, look, you don't have complete control over this. We do have the ability to have a say. And as such, I think this is more about making a point than anything else. But I do see the point on the EU citizenship front, because ultimately a lot of these people, both EU people who live in Britain and also Britons who live abroad, need to have some clarity about their future in order to make decisions about their long-term plans, those who have families and careers and so on. So, as I understand, the House of Commons are due to vote on this new amendment bill on the 14th of this month, and then that should all go through fine, which means that the government can still then look to trigger Article 50 by kind of mid-March time, ahead of their end of March deadline. So this isn't really too much to get excited about from a cable trading potential at the moment. When it goes to the House of Commons, again, this is when the government have a bit more sway, if you like, with their majority. And so it's only when it goes back to the House of Lords again for confirmation that it might get interesting once more. But all things being equal, this should just go through from here on out. Okay, the other things are then, can't really go too far without mentioning, or at least giving an update toward the political situation in the Eurozone. Starting off with France, this was opinion way, where let's just call it the premier kind of Prezi track or presidential tracker of the polls that people are looking at. And as you can see in the first round, Macron and Le Pen are pretty much even now. There's only a 1 percentage point difference, as you can see the two at the top here. Previously though, if you were to go back only to the 20th of February, which wasn't that long ago at all, there was a 7-point difference. So Macron's managed to narrow 7-point gap to just 1. As ever though, it's not the first round that people are concerned about. It's the second round, the runoff. And really this has become a bit of a two-horse race given the pressure through the various allegations that Fillon, which we saw will continue his presidential race yesterday, has been under immense pressure. And so his race, if you like, seems to be falling away in terms of being a credible candidate. His gap is almost becoming to a point of it being insurmountable. Now, his strategy probably to continue running, I think, has some logic, because the first round of the French presidential elections is not until the end of April. There's still quite a bit of time there, and so still plenty to come out potentially on Macron that we don't know about yet. And I would imagine that to be the case. That's just the nature of the kind of political tactics, if you like, going into these big events. The interesting thing here, though, is what we had yesterday, and these come out on a daily basis, so be on the lookout for it, is that the gap is re-widening 63 to 37, you can see, in favour of Macron. At the moment, the market has become somewhat desensitized to this because they're fairly comfortable with the fact that Macron has a fairly substantial lead at this point. What I'm looking for is that if Macron starts to get up to 65, 67 type gap, so his gap goes basically from 20 to 25 points or to 30 points, then I would say that's going to be a euro positive. At this point, these 1 percentage point increment changes on a daily basis, I think, are not too significant from a tradable or action point of view. Either Macron needs to slip kind of 59, 58, and it needs to narrow to kind of low single digit percentages between the two candidates, or he needs to just run away with it, and we need to be looking at more 25 to 30 percentage gap. That's when there's a little bit more either clarity, Macron's getting to a point where it's insurmountable for Le Pen to come back and win, and so Euro confidence on the alleviation of French political fears, or the opposite, and it narrows, and the market does become very nervous about the situation. They're the two kind of spectrums that I'd look at when trying to interpret the polls going forward. One of the other things, obviously, that's going on at the moment is the Netherlands, and what I have seen is a very interesting update from Deutsche Bank this morning, and they're looking at the fact that Geert Wilders of the Freedom Party, the Pelling Schweizer poll aggregator, now has the Liberals as taking between 23 and 27 seats versus the 22 to 26 for the Freedom Party. So that is for the first time since November that the Liberals have gone ahead in the poll of polls. So certainly not quite yet a done deal in regards to that situation. And to give you a bit of a timeline with the Dutch elections, because obviously this has been much less publicised in the press comparative to France, is that you've got television debates coming up, and as we've so often seen with the US election, with UK general elections, these TV debates do often carry a lot of sway for those voters kind of sat on the fence, so to speak, waiting to see a kind of head-to-head battle to see how they stand up towards each other. Do you remember the general elections where everyone was really pro at that point? I think it was Nick Clegg. Everyone was getting really excited about the Lib Dems, and then Nick Clegg was just absolutely dreadful in the live debate, and then he lost a lot of support on the back of that. So again, this is going to be interesting when these come up, and as a timeline, you've got the 5th of March, the 11th, the 13th, the 14th, so you can see it really starts to ramp up ahead of election day, which is on the 15th, which could also coincide with when we trigger Article 50, if you're to believe some sources. So these will shape those expectations going into that event, just so you're aware. It has been brought to my attention about potentially there's a bit of a reference towards the Dutch referendum and how the Dutch law exists in regards to a certain proportion of citizens, if there was large enough, apparently 300,000, that they could call a referendum. I would say that's probably, I've not looked into that too much, but I definitely will do. It might be a similar situation as towards what we have in Britain, where essentially anyone can call a public kind of vote, if you like, to bring forward as a hearing in Parliament, and if it gets so many votes, like 100,000 or more, then it has to be heard in Parliament. And so maybe it's a similar setup in the Netherlands, but the kind of benchmark level is 300,000. One of the things that we know with the Dutch situation, of course, is, well, let me just show you, this is that timeline I was just referring to with the Netherlands. One of the things we're talking about with the Netherlands is that given the close-run nature between a lot of the different political parties, is that one of the most likely scenarios with the Dutch election is that we could have as large as a 5-way party coalition, which obviously makes things like trying to call a referendum very difficult when you have different leaning and quite sharply different leaning parties on the political spectrum who are obviously going to counteract each other, and you get a bit of what they would call a political stalemate, if you like. We'll look at the Dutch situation more and more, I guess, as we go through the coming weeks, and I'm sure the research will start to ramp up on that. The other big headline that you should be aware of from overnight is from this lady. Now, you might not recognise her, but she is very important for one key reason. And for those who were trading last year, if you remember going into the September meeting, it was very on the balance on whether or not the Fed would look to hike at that point. They ultimately didn't. They pulled the trigger in December instead. But one of the key things that we were looking at in September was that everyone, it seemed, at the Federal Reserve was being extremely hawkish. And what a lot of people were looking for is, what does Fed's Brainard have to say? Because she is pretty much the most dovish member of the Fed. And so if she were to turn hawkish, then you would think, well, it's a surefire thing. And so actually she was a little bit more, let's say, even-handed with her delivery, and as such it kind of tempered back a little bit of the expectations of the hawkishness of the other people that she works with on the open committee. Now, she spoke last night, and very interestingly, so as I just said, she's the most dovish person at the Fed. She said rates can rise soon. She said the Federal Reserve should be prepared to raise short-term interest rates, quote, soon. As the US closes in on full employment, inflation heads towards target, and global growth assumes a more solid footing. So it's getting very, from a communication point of view now, I know in my briefings the last couple of days I've been a bit reticent to commit to March, because I still have had the feeling more about June, really, because I don't feel like we heard a lot from Trump. But having a comment like that, being more bullish or hawkish from the most dovish member, does make me think that the Fed, if they don't do it, then they're going to lose a degree of credibility, you would think. How can every single member be so overtly hawkish and yet not pull the trigger? Surely people are going to start losing confidence. In fact, let me just get you up this image that I saw yesterday. The guys at Ranscorp tweeted it. It was in the Texas piece. Here we go. This is the recent Fed commentary. And obviously the big catalyst we've had this week is Dudley and also Williams. So with Dudley, one of the key things here was that he also is a slightly dovishly leaning and is also very senior, as is the vice chair of the Fed, but said the case for tightening has become a lot more compelling. If you go through the comments we've had from all the Fed members, you can see there in the end of February, sees March rate hike getting serious consideration, 3 hikes are appropriate this year, should move sooner rather than later, March is a live meeting, March hike on the table. It's like they're literally telling you we're going to do it. And so it's very hard, I think, to look away from that as we progress towards closer to that meeting. I think the real nail in the coffin, are they going to do it in March? I think Janet Yellen's going to be very telling. She also speaks alongside the other vice chair, Stanley Fischer. They're both speaking tomorrow. I think what they say before they go into the blackout period, and then you have the accompanying non-farm payrolls report the Friday after, that's kind of to seal the deal then on whether or not we'll see a March hike. Because certainly from the economic data point of view from the last few days, we've had some phenomenally strong data. So the US economy is tracking on quite nicely at the moment. Okay, a few other things to be aware of. Eurozone inflation has been interesting. Yesterday, the strong dollar was weighing on Eurodollar and cable to quite a strong degree. Cable also lower, influenced by this House of Lords expectation that they would amend the Brexit bill. At one point though, the euro was moving lower, and actually it started to rally back a little bit. And the questions I had from some of the guys was like, well, why are we rallying here? Yes, there's a bit of, I guess, profit taking on those dollar longs, but the other thing is that yesterday we had the German regional CPIs, and the pan-German reading moved to 2.2%. That was the first time we've moved to that level. It was the highest inflation rate since August of 2012. You see that there? How far we have to go back towards when inflation in Europe was this high. And this is important, given this is the engine room of Europe, and given the fact that the ECB is still undergoing large quantities of quantitative easing on a regular basis. This is a very interesting development, because look how severe the return of inflation has been in Germany. It's shot up at a phenomenally fast pace. Actually, the trajectory of this increase in inflation, just quickly casting my eye here, really hasn't been seen that quickly at all, going back through the period since the financial crisis. This morning then, to follow that up, given the fact that the currency has been under pressure for political reasons in France, from the quantitative easing ongoing from the ECB, is that German import prices have risen 6% on the year. That's the biggest jump since 2011. So almost the price you're having to pay from internally from foreign imports is going up because the currency is impacting them. So inflation, certainly a key thing to look out for in the Eurozone going forward. Maybe that's just negating some of that, an outright sell-off in the euro at the moment to some respects. Okay, quickly then, just to have a look at the calendar for today. Talking of inflation, Eurozone inflation, that's coming out 10 o'clock this morning. So any of you guys trading those European assets, you need to be watching that figure. Upon release, we're expected to move to 2% from 1.8. Now, if you look at that movement that we've seen really since the summer, it's taken a little bit of time, and now it's really starting to get a bit of a head of steam here. The last print at 1.8% was the highest inflation rate in the Eurozone since February of 2013, boosted by fuel and food prices. We're looking at 2% today. So keep an eye on that figure. Anything that goes 2.2 above, then you'd be expecting yields to move higher. The euro currency to appreciate would probably be the most likely knee-jerk reaction in that scenario. Looking elsewhere, going further forward into the afternoon, you get the weekly jobless data from the US, Canadian GDP. Don't forget though, this is very backward looking, so if you're looking at this from a CAD point of view, maybe specifically for the FX, but we're looking at December and Q4. Don't forget we're in March now. So ISM New York Index, otherwise then, looking on the overall, it's a pretty quiet day in comparison to what we've had more recently. Speaker-wise, you do have Fed's Powell, who is a voter, speaking on CNBC. That will be at 4:15. Lautenschlager's not till much later in the evening. So interesting things to look out for today, I'd say, are, given the fact of the big rise in equities yesterday, I still feel the better positioning is to be long these equity markets, but I guess it's about identifying a good entry point to get long again. There could be a degree of a little bit of profit taking, which is kind of what you've seen to a mild degree since the late US and Asian session, which is, I'd say, quite a natural thing when we've had such a surge in prices the day before. The S&P future, obviously it's found a little bit of resistance around that 2400 mark. So that's kind of your upside target, I guess, if you were looking at pivot as a potential entry. Likewise in the DAX, you've also got that 12,000 level support, also seen just below the pivot today. Currency-wise, keep an eye on these inflation figures and for French poll updates for the euro. For sterling, I'd say looking at that more technically, the bias there probably still to the downside given the firmer dollar on the Brainard comments and the Fed hike expectations, in the contrast of, at the moment, a little bit of what people were calling yesterday Brexit reloaded, as in going back to Brexit talk. Yesterday's or overnight low coming in 122.63 downside, and then you've got the S1 sitting just sub there at 122.49. Okay guys, gonna leave it at that. So enjoy your session, and I'll see you in the chat room. Thank you.